maybe within the minute, within the meeting, there will be electricity shortage. Who knows? So I don't know. But here we are. So let's continue. Okay. In the previous class, we discussed about channel, right? If you guys remember, we discussed about channel. And today, of course, we'll talk about more things. Let me know if you can see my screen. Just a quick yes in the chat. That's all I need. Yep, great. So let's start without wasting any time. In the previous class, we discussed about trading setup 03, in which we took long and short position. Okay, it's a swing trading, and I also mentioned that you might not take this setup, or you might not use this setup for trading. Okay, this is all already explained. Okay, and this was the result. I think I have showed you example on chain link. Now today we will of course continue, and today we will talk about trading setup 04, trading setup 05, and we will focus on how to use the 20-day moving average and what is 20-day moving average, and also why it is important. Okay, so let's start with trading setup 04. It will hardly take 5 minutes to complete this topic. Okay. And also, just like always, you can always, if you have question, you can send it to me in the chat, and I will take those questions at the end of the class. Okay. So yeah, trading setup 04. Now, trading setup 04 is just like trading setup 03, but in an inclined way, or you can say in an uptrend. That's it. Okay. So let's write T04. Now, in this setup, you will take only a long position. Okay, that's it, just a long position. You will use this setup mostly in the second phase, actually, in the phase 2. And just like always, we will be using 1 hour chart, 4 hour chart, and a 1-day chart. How we are going to process? Of course, first we will look at the 1-day chart, then a 4 hour chart, and then a 1 hour chart to figure out a proper entry point. Okay, that's it. That's what we have here. Yep. And of course, it's a swing trading, so I don't think, let's just write as C. Now, this trade is very simple. It's just like the previous one, but in the uptrend. Okay? So it will look something like this. Okay. Now you guys have to answer this question. So be ready for the questions, of course. Now let's say the market is moving something. Something like this. Okay, and let's give it a name. So A dash, B dash, C dash, D dash, A, B, C, and D. So 1, 2, 3, and 1, 2, 3. Okay, right here. Okay, great. Now, can you tell me how many points do we need to draw a trend line? It's a very simple question. In the previous class, we discussed about trend line. Just tell me how many points we need to draw a trend line. Okay, I got 2 answers. Any more? Okay, so we do need 3 points. Absolutely correct. Minimum is 3 points. Maximum it can be anything, but the minimum is 3 points. Okay. So now can you tell me on which point I can take a trade, or I should take a trade? On which point? We have options A dash, B dash, C dash, D dash, and A, B, C, and D. Tell me on which point I should take a trade in this scenario, in this condition. I'm waiting for the answers. Think about it. Okay. Even if you have a incorrect answer, it's totally okay. I just want you to participate. So think and give me answers. It's going to be simple. Just think about it. How many points do we need? We already know 3 points. but on which point we should take a trade in this condition. Okay, I think a little bit it's a confusion, I believe, maybe. Okay, no worries. Okay, we got the answer C, D, D dash, and C. Okay, I got it. C dash, C, D, and D dash. C dash, C, D, and D dash. Okay. The one answer I got is a C. Okay. 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 So D is also there. So let me just show you the correct answer. The correct answers are two, which is C, and D is also there. If the market moves up, of course you can take a trade. If there is a U-turn, of course you can take a trade. But in this condition, there is no U-turn. So we should not take D. But if there was a U-turn, something like this, of course you can take. So yeah, let's C and D are the correct answer. Okay. Now I also got this answer C dash, C, D, and D dash. In this answer, the two things are wrong, of course, which is C dash and D dash. Why? Because in the initial, when I told you, as I said, in this trade setup, you can only take a long position. You can't take a short position. So if you can't take a short position, it doesn't matter. Even if you see a trade, you are not going to take it. Why? Because as a trader, we think in terms of probability and risk. So if I take a short position on C dash, there is a very high probability that I might lose the trade, or of course there is a high risk. Okay, and that's why we can't choose C dash and D dash. I don't think I need to explain why we are not taking trades on A dash and B dash, okay, or A and B, because till this point we don't know if this is a trend line or not, or this is a channel or not. That's why. Okay, that's why we can't take trades on this initial 4 points, and C dash is ignored. Why? Because we are only going to take a long position. We are not going to take a short position. That's true. Okay, of course C is there. So great, good answers. Okay, I hope, I mean, everyone is correct in this case. Yeah, it's just that we have added more options in this. But yeah, good work. Okay, now you all know how we are going to enter. So once the market takes a U-turn, then we will enter. Correct. Just before the D dash, we will exit. Correct. This much is clear, I believe. And below C, I will take a stop loss. I will put my stop loss. Okay. So that's an entry. That's an exit. Entry means buy. Exit means sell. In the long setup, whenever I say entry means buy. Exit means sell in a long. Okay. Okay. This is great. Very good. This is our setup. Everything is good. Now I mentioned you one more thing. I think in the third class I showed you. This is like what, fifth class, I believe. This is, yeah, it is a fifth or sixth class. I don't remember, but yeah. So in the third class, I mentioned you that as a trader, we have 3 jobs to do. 3 core jobs. The first one is to make profit. Correct? The second one is to secure our account. And the third one is to secure your profit. That's a 3 job that we have. Okay. Now in this case, of course, we are making profit. So that is good. Okay. The market moved up. Everything is good. Everything is in green. Great. But now you see this point. You see this C dash, sorry. From the C dash, the market went down. Right? That means there are sellers available around C dash. Correct? In this area, there are sellers. So there is a chance that market might move up and it might drop from C dash. There is a chance, of course, there is a probability. Okay. If it doesn't go down, if it goes up, great, everything is good. We already have our exit point set up. But what if it goes up and then it drops? What should we do in that case? Okay. First and foremost, once you're in profit, once the market moves up, the first thing that you should do is to remove your stop loss. This is stop loss. You have to remove it. You have to do it manually. You have to manually remove this one, and you have to put a new stop loss around the entry position, so you don't end up in loss. That's the first thing you have to do in every trade. That is the first thing you will be doing. You will be putting a new stop loss. By first you have to remove the previous stop loss, then you have to add a new stop loss at your entry position. How to do it, we will discuss about it. Don't worry, I will show you how to do proper trade by using Binance or by using Bybit or maybe any other exchange. So don't worry. But yeah, of course, we have to put a new stop loss right here. Now, once the market touch this point or this price point, what you have to do? Then you have to remove this stop loss again, and you have to put a new stop loss right around here. So this is going to be our new stop loss. The this stop loss was this. Then we cancelled it. Then we put a new stop loss right here. Then we again cancelled it. And once the market is somewhere in right here, then we are going to put a new stop loss at this point. Now, why we are going to do that? Because, as I mentioned, 3 jobs: make profit, secure your account. That's why we are putting this stop loss, the second stop loss, right, at the entry position. So we don't want to lose any money from our account. That's why. Third job, to secure your profits. So once you are in profit, you are already here. Now you have to secure it. See, in trading, in investment, anyone can make profit. Anyone. Okay, it doesn't matter if you know about the market or not. But maybe by chance, by luck, you might make some profit. But if you don't know how to secure that profit, that means that it's a waste, right? The only money that you have is in your bank account. That's it. If you are putting money in trading and if you are thinking, okay, my profit is around $200 or $500, but if you are not booking those profit, that means that profit is not yours. Still, it's in the market. Okay. Once you book it, now it's yours. Okay. So this is a very, psychological thing also, technical thing also, whatever you can think about it. But you have to manage your money in a proper way. As a trader, you have to. Okay. Okay. So once the price point is somewhere in the between, what you have to do, you have to put a new stop loss just below it. From this point, 2 things can happen. The market can move up. If the market moves up, everything is good, great, good trade. Okay. But if the market goes down, then what will happen? You won't lose all of your profit. You will still make a good amount of, let's say 5% or 6%. A profit is still a profit. Doesn't matter if it's 1% or 10%. Okay. So what happened in this case? What you did here is you made sure in this case that you end up in profit. Okay. So you at least have secured this area as a profit. Now it can be 5%, 6%, whatever. But yeah, you are ending up in profit. Okay. This is what you have to do. This might look a little bit complicated. Okay. It might sound a little bit complicated, but it's a simple thing. It's just that as the market moves up, you are increasing your stop loss. That's the overall game. As the market moves up, you are increasing your stop loss. That's it. Okay. Now let me show you example of it so it will be clear. Oh, okay. I think I have got example. I might have to go on a 4. Yeah, this one. This one, or maybe we can find a new one also. Let's see. I think I have found it on, yeah, on this one I think we have. Now you see, let me draw it for you. You see what I'm trying to do? See the channel? Okay, I think everybody is seeing it. Okay, this is a one way of drawing it, and of course, the other way of drawing it is also simple. You can just use a parallel channel. This one. Okay. So of course, you can't take a trade right here. You can't take a trade on this too. You can't take a trade on this one because that's the second point. But you can take a trade right here in this area. Okay. Now let me zoom in a little bit so you guys can see. The market moved down, it moved up, again it touched, and then it moved up. Okay. So of course, you can enter wherever you want. Take a long position, put a target, the stop loss proper. Okay. And in this way, of course, if you are right, you will make around 23%. If you are wrong, you will lose 2.63%. Maybe you can increase it. There is also this possibility. So you can make it up to 5% also, which is also good because the risk to reward ratio, if you divide, I hope everyone can see it. Let me, because I think some people have joined from mobile phone. Okay. If you have a laptop, then use a laptop to join the meeting. That will always be a better option. Okay. It's always better to join from a laptop or a PC if you have. Okay, but yeah. So see, in this case, of course, you can clearly see if we win, we are going to win 23.46%, and if we lose, we are going to lose 4.41%. And if you divide those numbers, you will get 5.32, which is greater than 5. Minimum risk to reward ratio 1:5. Remember? So yeah, but yeah, as I said, let me read this one. So we have entered right here. Great. The market, we have a stop loss right here. Great. So what we have to do first, right? Let's say, for example, the market is right now at this point. Okay. What you will do, you will remove this stop loss and you will increase the stop loss up to your entry level. First and foremost, that you have to do. Okay. Now, once the market touched the previous resistance level, which is this point, Okay. Now, what you have to do at this point, you have to increase the stop loss again, and you have to make sure you put it somewhere right around here. Okay. So from this point, two things can happen. Either the market go down or the market goes up. If the market goes up, we already have our exit position ready. If the market goes down, we already have our stop loss ready. So at least you will make 9% of profit. At least that's the minimum. Okay, very good, great, right? Just 1 second. Yeah. So that's it. Okay. So this is our second channel, our uptrend channel, and that's the example. Now the third one. Trading setup 05. Trading setup 05 is the last trading setup as a beginner in a beginner course, of course. After this, we will enter into the intermediate part, and in intermediate part, things will become more complex. This is simple stuff right now. Whatever we are studying, it's a simple stuff. You have all the recordings of the classes. The company has made sure, I believe, that you guys have all the recordings. Make sure to watch each and every recording at least 4 times. At least 4 times. Okay. Because I mean, of course, if you watch it 1 time, or even if you take the classes or take the sessions, you might forget few things. So make sure you rewatch it again and again. Okay, so last trading setup of a beginner session, T05. T05, very simple, nothing to be worried about. And I don't think you are going to use it for the next 1 year, this setup also. But you might use it after that. In the bear market, you will use it. Okay? In T05, we only take short positions. Okay. Of course, this you have to use when the market is moving in the downward direction. That is also there. Again, you can use 1 hour chart, 4 hour chart, and 1 day chart. Okay. And this is also a swing trade. Okay. I don't think I need to explain, but still, let me know if you have any questions. Now, this time I need correct answers from all of you. Okay. Just let me write the names. And just to make it more simple, so there is no confusion. Okay, now tell me on which point I should take a trade. On which point you will take a trade, let's say. If you see this kind of scenario, on which point you will take a trade? Let me know. I will wait 1 minute for the answers. Let me know on which point you will take a trade. This is what we call a downward channel. Okay. The previous ones one upward. This was an upward channel. This is a downward channel. Okay, downtrend channel, whatever you can say. I will wait. Okay. I got one answer. I'm waiting for a few more, please. Okay, got few more answers. I got one more answer. Please do give you so whatever you are thinking, even if it's a wrong, nothing to be worried about. Think about it. On which point you will take a trade. I'm just focusing on this right now because we might not discuss this topic again. That's why. Okay? Because as I said, this is the last beginner topic. Anyone? Okay. The same answers. Okay. Think about it. Think about it. Sasa, where are you? Sasa. SA, yeah. And Reeves Gym. REVS J space JM. Those guys, those two guys. What are your answers? I just know you guys by your username, okay? But I do remember. I remember your username were already. I mean, you always give answers. But yeah, do participate. Reeves Gym. If I'm sorry if I'm pronouncing it wrong, but Reeves Gym. What's your answer? Okay, no worries. Where is Reeves Gym? I think he is not here. Yeah. Okay. So the correct answer is C dash and D dash. Okay, that's the correct answer. C dash and D dash, and I think almost all of you have given the correct answer. Sasa D dash, okay, but that's of course it's a part correct. But you can also take a trade on C dash. Okay, but how can you take a trade on C dash? Okay, there is of course things. See, very clear we can't take a trade on A dash, B dash, and A and B. Great. On the on the fifth point, of course, if the market takes a U-turn, you can take a trade. Okay, if you understand what you are doing, if you understand, okay, this might can convert into a channel, then you can take a trade on C dash also. Okay, so C dash is also correct answer. Okay, but if you don't want to take a risk, if you want to be 100% confirm, 100% right about your trade, then the answer is D dash. Okay, but yeah, very good, everyone. Okay, so yeah, so again, you will enter at the top. When I say enter, it means sell. Why? Because it's a short position. That's why. And you can buy back right here. That means exit. And then a stop loss. C dash, are we not having 2 points? Yes, we do having 2 points till C dash. But if the market takes a U-turn from C dash, then we can count this as a point. But after the U-turn, not before that. Okay. After the U-turn, we can count it as a third point. Okay, we can. But if you want to be more secure, then D dash is the answer. Yeah. So this ones, of course, I mean, you know how this play out. But yeah, of course, if the market drops to level B or point till point B, let's say till here, what you have to do, you have to remove your stop loss and you have to put a new stop loss right around here. So your profit is secure. Why? Because if the market drops down to B, of course, there is a chance the market might take a U-turn. Okay. And in that way, we have to be secure. Okay. As I mentioned in the previous one, same logic in this one also. Now let's go through the example. It's a very simple example, but let's see. As I said, this trading strategy, you might not use it right now, but it is very useful when the market is moving in the downward direction. And from this point onwards, I think BTC will go down a little bit. Okay, how much it will go down, that's of course a question, but I think it will go down a little bit. But overall, if you talk about the next year, I believe we are in the bull market. Okay, this one. A, A dash, A, B dash, B, C dash, C, something like this. Okay, so of course you can take a trade right here. Something like this. Okay, it's very simple. You see, enter, exit, stop loss. So I can also increase the stop loss. If we win, then we are going to make around 22.53%. Of course, you can see the market did went down below that level also, but that's not our concern. This is our exit point. We will exit at that point. That's it. Okay. And of course, if we lose, then we would have lost around 4%. And if you divide these two numbers, you will get 5.39, which is greater than 5. So that's good for us. Okay. So yeah. So I hope everyone till now understood about support and resistance, understood about how to use trend line or how to draw trend line, understood about the risk to reward ratio. These three are the important topics. By using these three topics, we are creating everything. The channel, the trend line, the support and resistance, trade setup 01, 02, 03, whatever you say. But these three are the basic points that you have to learn. Support and resistance, trend line, risk management. 3 points. Okay. Great. Now we will talk about indicators, or from now onwards, you can say we have entered into the intermediate part. So all these topics from point 17 to 28, almost 29, let's say, this is intermediate. And now things will become a little bit more complex. I will try my level best to explain it to you in a as simple as possible. Okay. But yeah. So first and foremost, we are talking about moving average. Moving average. Okay. There are two moving averages which are important for us. The first one is a 20-day moving average. And the second one is a 20-week moving average. 20-day moving average. Now, it's a simple moving average. There are two types of moving averages, simple and exponential. We are going to use simple moving average. Okay, simple moving average. Okay. Now here, this 20, it's a length. We call this as a length, denoted by L. Let's say. This day or this week, of course, this is also a length. And this day and this week is time intervals, TI, time interval. Understood? So that means we have two variables, length and time interval. Okay, we need two things to draw a moving average, length and time interval. Okay, now why moving average? Why we should use a moving average? Let me make few things very clear from the starting, because now we have entered into the indicators part in a little bit complex things. Okay, understand, indicators are not strategies. Okay, indicators are not strategies, correct? They are not set up. Okay, so generally a trading setup or a strategy, whatever you can say. Okay? Or let's say setup. It's a setup, trading setup. It has two things, a strategy plus indicator. Strategy plus indicator. The combination of this both things is what we call setup. Okay. Strategy is what? Strategy is something which is based on support and resistance, which is based on trend lines, which is based on pattern trading. We will discuss what pattern trading is, of course. But this is what we call a strategy. The strategy is something which we use to find out an entry point, to find out an exit point, and to find out a stop loss point. That is a strategy. Okay. So strategy is around 80% part of trading. Understand what I'm trying to say? In one trading setup, we have two things: strategy and indicator. The strategy is based on support and resistance, trend line, pattern trading. This is strategy. Okay, something which is repeatable, patterns. Okay, that is a strategy. In a strategy, we have entry point, exit point, stop loss. Risk management comes under the strategy. The second thing is indicator. Now, why indicator is useful? An indicator is just a weightage of 20%. That's it. That's it. Indicators are not setup. Indicators are not strategy. Okay. You should never buy and sell based on indicators, because I mean, if you go in the market, if you go on YouTube, you will see YouTubers who are selling indicators, right? Indicators for $500, indicator for $1,000, $500, who knows? Okay. But indicator is not a strategy. So you should never buy or sell based on an indicator. Okay. Indicators, it helps us, of course. It provides us a little bit more information. It provides us something which we can't see from our naked eyes. If I open this chart right now, there is something which I can't see. Of course, I can see support and resistance, I can draw trend lines, that I can do. But there is always something which I can't see from naked eyes, like volume. How many number of people are buying and selling? I can't see it by looking at the chart, right? There can be 100 people, there can be 100 million worth of USD, or there can be 100 billion worth of USD. Who knows? Right? So there is something hidden which I can't see. And for that, we use indicators. I want to make this thing very clear. Indicators are not strategies. You should never buy and sell based on any indicator. Indicators provide us something which we can't see from our eyes. Okay? That's why we use indicators. They are useful, they are helpful, but they are not as equal level with the strategies. Okay? Okay. So again, after that, of course, how to put an indicator? It's very simple. You see, there is an option called indicators. Okay. You have to click on it. Then you have to go into the technicals. And here, just write moving average. Okay. Moving average. So I'm going to use this one. Moving average, simple. That's it. We are using simple moving average. Okay. So if I click on it, automatically what will happen? On the screen, you will see this blue line now. See, we have now this blue line. And actually, let's go on a Bitcoin chart. It will be more easier. Okay. So you see this blue line now. Okay. Now what we need? First thing, let's say what we have already here. Okay. On the left top corner, we have SMA, simple moving average, 9. Okay. And here we have different options. So we have option of this I. If I click on it, see the indicator, the blue line will disappear. See, if I again click on it, it will reappear. Okay. Then we have settings. So if I click on settings, then we have 3 options: visibility, style, and inputs. Then we have to go on inputs. Now you see this length option. I told you what we need. We needed 20 length, correct? And day, time interval is basically day, right? 20 is the length. So what I will do, I will change this length to 20. Okay. And of course, the time frame, time interval, time frame, same thing. You can call it time frame, you can call it time interval, doesn't matter, the same thing. It says chart. Now I need a 1 day, so I will just choose 1 day. Okay. So length I have changed to 20, time frame I have changed to 1 day. If I go into styles, I can change the color of the line. I can make it yellow, brown, white, whatever you like. I like to keep it blue. I can make it thick a little bit. Okay. And I can also choose the opacity. So I like to put it around 100% also. So that's it. Once done, click on OK. Zoom out a little bit. Let's go on a 1 day chart. Okay. So this is how you put moving average on the screen. Understood? Now the question is, what kind of information we are looking for by using 20-day moving average? Of course, we are using 20-day moving average, but what kind of information? As I mentioned, indicators provides us information which we can't see from our eyes, correct? Okay. So now we are using indicators, but what kind of information they are providing? What kind of information moving average or simple moving average or 20-day moving average is providing us? Okay. So now see, we all are connected to each other, all of us, in some way or another way. Okay, you guys are living in your own country. You guys are thousands and thousands of kilometers away from me. Okay, I am this guy who is teaching people, who is trading in India, somewhere from the small town. The only way to connect is via internet, via social media, via YouTube, via Google Meet, right? Via WhatsApp, via Telegram. Okay, but we are different people living somewhere else, doing our own job, right? But we are all connected with each other by using internet. Why? Because we all are interested in crypto, correct? Crypto is a market, and in each market there is a buyer and sellers, correct? Even at the top, even if you see at the top, someone has sold his Bitcoin at the top, and someone has bought their Bitcoin from the top, right? So there is always buyer and seller at the top, or even at the bottom also. So that means there is two way of thinking. Either you become buyer or you become a seller, correct? Either you become a bullish person or you become a bearish guy. Okay, there is two things here. Okay, now as a trader, what we have to do? What's our job? As a trader, we have to bet where the market is moving. So if I'm betting, if I'm buying something, that means I think, or my analysis says the market is going to move up. Or if I am selling, that means my analysis says the market is going to move down. Correct? Okay. But if someone who is, as I said, like, it generally happens. So for example, if you think something is true, if you think something is true, generally you follow those people who are saying or who are inclined with your thought process. If I am bullish about Bitcoin, that means if I go on YouTube, then I might follow those people who are also bullish about Bitcoin. Correct. It generally happens. So if you are seeing maybe the apocalypse is going to happen in the next 1 year, you might follow those accounts who are talking about this stuff. Okay. If you are into cricket or football or hockey or whatever, okay, you might follow those people who are crazy about those things. So it always happens. So if I'm bullish about Bitcoin, I might follow those people who are bullish about Bitcoin. And if someone is bearish about Bitcoin, because there are many people who are bearish about Bitcoins, right? So if someone is bearish about Bitcoin, they follow those people who are also bearish about Bitcoin. Okay. And this thing always happens. But that does not mean we are right or they are right or someone is right. Okay. Anyone can be wrong at any time of period. Okay. But why? Because we are following a particular people who are also inclined with our thought process. That's why. Okay. Now, what I'm trying to say is that in our group, let's say in our group, we have 4,000 people, correct? Okay. All of us are bullish about Bitcoin. All of us. Mostly, I believe. Okay. Everyone is saying the same story. Market is going to move up. Market is going to move up. Market is going to move up, right? We are also guys who are following the same stuff. But what if market goes down? Who are going to tell us? No one. Okay, and all of us are going to lose money in that way. Okay? That's why we don't focus, or as a trader, we don't focus on sentiments. We don't focus on that. We don't focus on emotions. I feel Bitcoin is going to move up. It's a bullshit answer. I feel the market is going to move down. Bullshit answer. Okay. You can feel anything. It doesn't matter to the market. The market is going to do its own thing. Okay. But you can always rely on mathematics. You can always rely on mathematics. Mathematics or science, they don't tell you lie. Okay. They provide us fact. Correct. And that's why we are using moving average, because moving average is mathematics. Okay, it is the formula, it is a mathematics, correct? Okay, so moving average, we are using 20-day moving average. It basically means the average price of 20-day previous 20 days. So for example, if you see this point, how does it come? Why? Because what it did is basically is added the previous 20 days, okay, price point, and created an average of it. That's why. That is moving average, simple moving average. Okay. Now, if the market, when I say market, I mean to just Bitcoin. Okay. If Bitcoin is above the 20-day moving average, that means most of the traders